So up next, we have our first presenter, which is going to be Pete Londa, CEO of Tantalus. Tantalus Systems trades on the TSX under the ticker GRID. Tantalus finds itself at an interesting position, being at the juncture of the electrification of everything and the modernization of the grid. So really exciting technology story that listed about 3 years ago in Canada, but has a long operating history. Here to tell you more about that's Pete Londa, calling in from Burnaby, I believe.
Worldwide headquarters, Burnaby, British Columbia. Deb, thanks for having me.
Yeah, thanks for participating.
Yeah, great opening keynote there. So appreciate you organizing that for all of us.
Great. Well, Pete, do you want to take us through sort of the background of Tantalus and what's exciting right now? I think we have a number of people that are unfamiliar with the story and a number that are familiar. So
Sure.
try and make it
okay
new
if I
and
share.
interesting.
Well, hey, how about that? Is it okay if I share my screen?
Yep, go for it.
Let me know if this comes across.
Nice looking presentation, Pete.
Yeah, so to that end, thanks for helping us clean it up, Deb, and style it a little bit. So good morning, and for those on the East Coast, good afternoon. As Deb mentioned, my name is Pete Londa. I have the privilege of serving as president and CEO of a company called Tantalus Systems. What I'll try to do is provide a very high level summary of who we are, and then certainly ensure we have some time for Q&A, Deb. A number of attributes that were just shared during the keynote are very applicable within our model. So helpful to get that perspective and insight as investors are evaluating tech companies that fall under the $100 million market cap threshold. Just fast forwarding here, very high level of our organization. As Deb mentioned, we're on the Toronto Stock Exchange under the ticker symbol GRID, GRID. And the ticker symbol ties directly to the purpose of our organization. We are a technology company that is focused on helping the electric utility industry modernize the distribution grid. For those of you who may not be too familiar with the utility industry in general, there are utilities who focus in the world of generation, transmission, and then distribution. Some cross over a few of those categories, and some are just very specifically oriented. Our focus is not generation and transmission. It is the distribution grid. And the distribution grid is what you see in the neighborhoods where you all live and work. It's the substations, the power lines above ground, below ground, all the way to the meter on the side of homes and apartment buildings. And then as we continue to expand capabilities, the devices behind the meter inside the home or apartment or building that can help utilities mitigate imbalances between the supply of electricity and the demand of electricity. As an organization, we've been pretty fortunate to scale. Today, we have over 285 electric utilities deploying our technology. It's a pretty comprehensive platform that we deploy. The vast majority of those utilities are in the United States. So to previous comments, our revenue profile, over 95% of it is from the US today. As a result, we report in US dollars, a bit of an anomaly for companies traded on the TSX. So sorry for the confusion there. But quick high level summary, last year delivered $42 million of revenue. That's growth year over year from 2022. And when we look back at 2021, we reported around $32 million of revenue. So pretty healthy growth over the last 2 years. Within our revenue mix, we have a combination of devices, intelligent edge computing devices that get physically deployed in the field, at the home, on power lines. And then from those devices, we collect data, and that data drives revenue contributions from software and services. Within our total revenue mix, 35% of our revenue comes from software and services, and embedded within that amount, about 24 to 25% of total revenue comes from annual recurring sources. Going into this calendar year, We have approximately 11.5 million US dollars of recurring revenue. Our ARR is reported on a rolling 12-month calendar basis. In terms of gross profit margin, a big area of focus for us as we seek to drive operating leverage as we continue to scale our company. Last year, 2023, we reported the highest gross profit margin in our company's history at 52%. I'd noticed the $42 million of revenue, also an all-time record for our organization. Very briefly, so what do we do? And what are utilities focused on? And why are they purchasing, deploying, and utilizing our technology? At the highest level, utilities have historically focused on the left side of this slide, from areas inside the substation to the power lines and devices called transformers that sit at the top of utility poles. They look like very large beer cans, for those of you who may not pay attention to them, and then down to the meter. And over the years, last 10, 15, 20 years, utilities have at least started to automate aspects of the distribution grid. With that said, it is an analog system, meaning very limited digitization and very limited visibility, command, and control of devices that the utility has to manage. Our history and our revenue profile comes from the left side of this slide. We have a suite of solutions, devices, edge computing, software, and services that help utilities begin to digitize and automate capabilities from the substation down the distribution power lines to the meter. And while some investors just categorize us as a smart metering company, because that is an element of what we do, I'd say that's really not a detailed perspective. For Tantalus, a device, whether that's under the glass of a meter, hanging on a power line, or in the substation, is a means to an end. The end is the data. And as we continue to accumulate data from these devices, it's driving an increasing contribution of revenue from software and analytics. One element of our organization that we think is unique is we've gotten pretty good at thinking through voice of the customer. And on an annualized basis, we host a users conference comprised of existing customers as well as some prospective utilities that are evaluating us as a partner. This year, we included the 5 covering research analysts that are tracking and writing about Tantalus, as well as some investors who attended. And Deb, who attended as well, who manages our investor relations, can attest it's a fairly unique event and something that's very important for our organization. And the reason why I highlight that is because in the middle of this slide, you'll see the grid edge and a circular device called the TRUSense gateway. The device that you're looking at on this slide is the output of our voice of customer surveys from about 3 years ago. And part of the rationale of Tantalus to go from privately held to publicly held and migrating over to the Toronto Stock Exchange was to access capital to bring this new capability into the utility market. And while I'll talk momentarily about the uniqueness of this device, what we have focused on, based on requests from customers and utilities that we support today, and some who are prospective customers of Tantalus, what was emerging is, as we think about reliability and resiliency of the grid and Tantalus, utilities continue to have an increasing amount of stress and anxiety and concern about the impact of electric vehicles, rooftop solar installations, power walls, and smart appliances that we as consumers are adopting, and how those devices are going to impact the integrity, the resiliency, and the reliability of the distribution grid. In particular, as electric vehicle chargers are added to the grid, that has a direct impact not only on the meter that delivers power to a home or a location where that EV charger is installed, but it impacts the power lines in terms of heat, and it most importantly impacts transformers that sit on utility poles. The reason why utilities are concerned specifically about transformers is that since COVID, the lead times to purchase a transformer have gone from 8 to 10 weeks to over 2.5 years. And the cost, in some circumstances, has quadrupled. Not only is there an increased demand for transformers globally, but one of the key components inside those transformers is a resin. It's the same resin that's being used for electric vehicle batteries. And so there's a shortage of that resin in particular that leads to extended lead times and higher prices. And whereas utilities have historically run transformers to failure, meaning let the transformer blow, people call to complain about a power outage, running devices to failure is no longer acceptable in today's world. It has an economic consequence to the utility. It certainly has an economic and potential life-threatening risk to customers. So the TRUSense Gateway was developed in conjunction with utilities to start to solve that problem. The problem being, as EVs show up, as rooftop solar installations get more broadly adopted, as storage devices inside the house materialize, how are those devices going to impact the integrity of the grid that we all rely on every single day? And that's what the TRUSense Gateway is geared to do. A couple of use cases that we're really focused in on with utilities, one of which is just enhancing metering capability. Not somewhat surprising, 20% of the meters in the United States, electric meters today, are still read manually. And just think about that in the context of even this call. We're all virtual. We're all online. We're all leveraging IP. We're all consuming power. I can personalize this where I grew up in Elizabeth, New Jersey. If you've ever flown into Newark Airport, that's Elizabeth. Big port, very industrial, very densely populated area. The meter on the side of the home where I grew up is still read manually once a month with an individual who writes down a meter read, goes back to the utility, publicly traded organization, mind you, on the New York Stock Exchange, generates a bill through their system, sends the bill to my parents. It's archaic when we think about having access to data in the palms of our hands and in our pockets every minute of every day. And so just enhancing metering infrastructure is certainly a key component of what we're doing. But what we've been able to do from a technological perspective is take very granular power quality measurements that typically are done at the substation level, and from an economic perspective, brought that technology down to every meter socket, every home, every business. And the reason why power quality is so important is as things like voltage and current start to fluctuate, it has a cascading impact on assets, whether that's inside our home, the lights are flickering, a refrigerator's burned out, a TV burns out prematurely, or for the utility, squirrels on power lines chewing away at insulation, trees hitting power lines that can lead to a fire, pole top transformers failing, outage, worst case, explosion, fire. We can predict and identify where issues are unfolding based on power quality measurement, the data from this device. We've also come up with a way for utilities to send a communication signal into the home, into a building, to ultimately have visibility and eventually command and control of the EV charger, of a water heater from one of our partners, GE Appliances, of a circuit breaker inside a home in an electric panel with one of our partners, Savant Energy. And some of you may say, why on earth would I give an electric utility the ability to turn on or turn off the EV charger at my home or the water heater? And the answer to that question is one, economic incentive that utilities are starting to deliver to us as consumers. And the second is, in some circumstances, I'll personalize it as the owner of an EV. I'd much rather have the inconvenience of charging my vehicle as opposed to a power outage that impacts my family. In terms of commercialization, this has been a 2.5-year R&D effort since the idea percolated 3 years ago from our customers. We've been developing this with 8 utilities as part of an advisory committee, which has now grown recently to 9 utilities. There are a few versions of this. The first version is a device that connects directly to fiber optics that utilities leverage in the field. And as of Monday of this week, it is now available for sale and being deployed by utilities. The Ethernet version is an extension of the fiber capability, and we are building a cellular version with Sierra Wireless that can ride on 5G or private LTE from a communications perspective. In terms of why we've been going down this path, the advisory committee that's helped us build this product, that has helped us test it, and now starting to deploy for their field trials and ultimately full deployment, represent an incremental $150 million of revenue opportunity for Tantalus over the next 5 to 7 years. That revenue is not backlogged today. We are starting to get orders out of that $150 million, and we'll be excited to continue to report on that as we make more progress through the calendar year. But we have a very good view as to where that revenue is coming from, which utility and when. We've invested about $11 million in R&D. So from the advisory committee alone, we're in excess of a 14, almost 15 times return on that R&D investment. Beyond the advisory committee, we are directly engaged with about 30 incremental utilities. We would refer to that as qualified and identified, that represent an incremental $350 million of opportunity. And for those of you who have maybe tracking Tantalus, or for those of you who may start to track Tantalus as a result of today's conference, if you look back a few weeks, you'll see recent announcements. One from announcing our first win for the cellular gateway with an investor-owned utility in the United States based in Connecticut called United Illuminating, massive milestone for our organization. They are one of the 30 utilities in this qualified pipeline. And a second win announced about 2 weeks ago, a city in Tennessee, the city of Bolivar, selecting Tantalus as their partner using the fiber version of our TRUSense gateway. Another utility outside of the advisory committee already starting to move. So in the aggregate, we think we've got pretty good visibility into over $500 million of opportunity to scale our business over the next 5 to 7 years. And we are looking forward to sharing some incremental news and updates along the way. Last but not least, from a capitalization perspective, we're pretty fortunate. A fairly clean cap structure, 100% common stock, no dilutive securities or warrants behind it. 5 covering analysts that have been very active with us. And since the beginning of this year, I'm certainly starting to see the wave that was presented by our keynote speaker on incremental liquidity in the stock, incremental trading volumes, and in conjunction with that, a nice beginning recovery to our share price. Deb, with that, I hopefully it's a quick snapshot of who we are, and would turn it over to you for questions.
Yeah, thanks for that, Pete. I don't see any audience questions, so you're stuck with mine for now. If anyone wants to save you from that, just type in a question.
Yeah, please. Appreciate it.
So now that you've achieved UL certification, how quickly do you see the rollout of the TRUSense gateway, and when do you anticipate meaningful revenue contribution?
So let me talk to that in the context of our revenue model, especially in light of some of the comments about deferred revenue and recurring revenue models. So let me describe our revenue model, and then I'll put that into specific context on the TRUSense gateway. The model for us is to convince an electric utility through our sales organization, people on staff, as well as a sales channel, about 20 sales channel representatives spread across Canada and the United States today. We work to convince a utility that we have the right technology, the devices, the software, the services, to solve very specific problems that they are prioritizing. And within that, we see immediate revenue from the sale of the physical devices, the edge computing devices like the TRUSense gateway that get installed in the field. Embedded on all of those devices is a software license. We today use a perpetual software license that goes on that connected device. And then as part of that perpetual license, we generate a 22% annual maintenance fee into perpetuity. For us, devices are typically deployed 12 to 15 years is how we model. With that said, we have some utilities that have deployed some of our earlier generation technology that are now entering their 20th year of leveraging those devices and continuing to pay maintenance on the software license as we go. So we have a really nice stream of recurring revenue from those software licenses. We've also introduced, using machine-to-machine learning, data analytics tools that utilities can purchase from us on a SaaS offering. And so that's a part of our recurring model as well. So a nice blend of both revenue upfront that covers OpEx, provides cash flow to the business, and then longer term planning, recurring revenue that we can count on each year. As it relates to the TRUSense Gateway, what we've shared publicly is we anticipate to start seeing some revenue materialize Q3 and Q4 of this year, so second half for us. Order of magnitude $1.5 million to $2 million. We've just activated the first production run of the TRUSense Gateway in conjunction with our announcement earlier this week of the certifications required to put a device in the field. And we've got a pretty good idea of where the first 5,000 units of these gateways are going to go. From there, order of magnitude between the advisory committee and utilities that are either through or actively involved in our sales process. 2025, sort of from a planning perspective, we're thinking an incremental $8 to $10 million of opportunity. That's risk adjusted out of almost $40 million of opportunity just from those first 30 plus utilities identified in our advisory committee. For 2026, for planning purposes, we're thinking an incremental $17.5 to $20 million of revenue. It's almost 50% growth top line between 2024 and 2026. I'd highlight that that's a risk adjusted number out of almost $100 million of identified opportunity for 2026 today that we're actively pursuing. So I think that's, we'll start to see and be able to share with investors and the market, I think a quick inflection in our model from a revenue perspective. And then from the sale of those devices, fairly substantial recurring revenue on a per device per year basis. And where that sort of magnifies itself, Deb, I'll just steal one more slide here. When we think of ARR, you can see our growth of the recurring revenue, I think codifies the model. Devices, from devices data, from data monetization. And since 2016, almost a 20% compounded annual growth rate, from about $3 million of recurring revenue in 2016 to now entering 2024 at over $11.5 million for this calendar year that will generate. So nice, healthy stream here of revenue. Not only provides more predictability in our business, but certainly improves our gross profit margin and profitability. Hopefully, it's a lot of context there to your question, but hopefully I covered it.
No, that's great. And how do you plan to finance the rollout of the TRUSense?
We've got inherent in our model, and we draw this out in our MD&A for those that actually read the MD&A sections for reporting companies. We've got a really interesting working capital model that we've built over the years. So the edge computing devices that we build are done by a contract manufacturer out in Southeast Asia, the Philippines. We've used that contract manufacturer now for over a decade, so long-standing partnership for us. We've negotiated pretty favorable terms in that a lot of the components and bill of materials sit on their balance sheet. They invoice us when a finished product leaves their factory. The payment terms to our contract manufacturer are greater than the payment terms to our customers, the utilities. And the way we've negotiated pretty much all contracts with utilities, there are always some exceptions, but we invoice utilities as soon as the device with software embedded on it leaves the factory in the Philippines. The net Payment terms from customers, it's about 30, 35 days. In some circumstances, 40. The net terms for our contract manufacturer are closer to 90 days. So we have hedge is the wrong way to put it, but we have a really, I think, seamless and scalable working capital model where we're able to collect revenue from customers before we actually have to pay supplier. That can lead to some wonky working capital numbers on the balance sheet at quarter's end from a reporting perspective. But it allows us to start to scale this business more aggressively with the TRUSense Gateway without having to go out and dilute shareholders and raise incremental capital to support working capital. At some point, it may make sense to strengthen the balance sheet, Deb, but we can scale this business this year, next year, and even into 2026 with the working capital and the terms that we've negotiated with customers and vendors.
Okay, and taking a step back, can you share an example of a utility that is advanced and utilizing a modernized grid and how Tantalus is helping them?
A great example for us is a utility that supports the city of Chattanooga in Tennessee. Not quite 500,000 residents in Chattanooga, but it sits between Nashville and Atlanta. And long ago, Chattanooga was a hub for manufacturing, industrial businesses that had factories. And over the years, as those jobs and that effort left the United States and went overseas, Chattanooga went from a vibrant economy to really a dormant city. The electric utility is actually owned by the city there. It's a public power utility called EPB, the Electric Power Board of Chattanooga. They support about 200,000 homes and businesses that are where the residents of Chattanooga live. And in about 2010, we started working with EPB on first time any utility has done this, taking fiber, bringing it all the way to the home, not only to backhaul data from homes and meters, streaming that data, but also to deliver broadband services to compete head to head with Comcast, one of the large cable providers in the US. And they leveraged our first generation technology. EPB is the anchor member of our advisory committee, and the TRUSense Gateway is their path to upgrade from first generation technology from Tantalus to now the TRUSense Gateway, our latest and greatest device. They've got about 100,000 legacy products installed, and over the next several years, they will upgrade all of those to the TRUSense Gateway. That utility is leveraging its fiber network and advancements in edge computing at meters and line sensors and substations, where they have the first self-healing grid in the United States, if not arguably the world. It is one of the most advanced centers. And you may ask, why on earth would that be in Chattanooga? The reason for it is there are a number of US government research labs in and around the Chattanooga area that fall within EPB's footprint. And so the city of Chattanooga actually is of national interest to the United States government. And so advancements and investments in that grid have been profound. We've fortunately been and continue to be the beneficiary of some of that money. And so that's an organization that in real time can identify where a device is about to fail and roll a truck proactively and a team to go solve that problem before it cascades into power outages. And we think about power outages, not only the inconvenience and the headache in my home with two teenagers who live and die by what's on their phone. So no power equals no Wi-Fi, no power to the phone because they have to charge it twice a day. So we'll talk about parenting skills separately, Deb, but right, that's the cascading impact for business. No power, you got economic loss. So that's an organization, EPB, that is at the cutting edge of really thinking through grid resiliency, reliability, and sustainability. And we're very fortunate to now be entering our third decade of relationship with EPB and really bringing this next generation technology, the TRUSense Gateway, into the market with them.
That's so interesting. I could ask you questions, Pete, all day. I find your business very fascinating. But you finished that question perfectly on time to wrap up your half-hour session. So thanks for taking the
Okay.
time.
Yeah, thank you, Deb.
For anyone that's new to Tantalus, there's many videos on the Adelaide Capital YouTube channel, and hopefully we'll be doing some more in the near future. So yeah, thanks, Pete. Thanks for presenting.